Okay.
Hi, Joanne. I'm so happy that you were able to join me. And today I want to talk about, as I know, for those that don't know Joanne, she's the Tax Lien Lady. You can find her on YouTube. So I'm having her doing this video because a lot of times people get confused on tax liens and tax deeds. And because I don't do tax liens, I'm so happy that you are on this video to share with my community. And so I just wanted you to just tell me a little bit more about tax liens, what they are, and why you chose tax liens as one of your lead investments.
Well, thank you so much, Micah. It's so nice to be here. I'm honored to be here because I do a little bit of deeds, but my expertise is really in liens. And it's so true that people don't know the difference sometimes between what a tax lien is and what a tax deed is. So I'm also honored to have you on my conference, which we'll talk about later, because you could talk about your expertise, which is doing the deeds and the overages, which is something I totally don't do. So, so thank you for having me here. And so what is your first question? Because I got so excited that I forgot.
It's like, so tell me about tax liens, because a lot of times people ask me, about tax liens and do I do tax liens? And I'm like, no. And I'll be completely honest. The only thing that I know about tax liens is that you don't get the property and that, it's an instrument. So like it's a percentage. You basically get a piece of paper with a percentage, but that's all I know.
Okay. All right. So here's how a tax lien works. In some states, if you don't pay your taxes, and the one thing I learned from this business is that pay your property taxes before anything else, because in some states, if you don't do that, they could just take your property. They will sell it in a tax deed sale, as you know. But in other states, they don't do that. They give the property owner more time to come up with the money. Now, they're going to penalize them for not paying on time. So they're going to add either a penalty amount or hefty interest rates for penalizing them for not paying on time because they're delinquent with their taxes. But instead of just selling their property in a deed sale, they're going to sell the taxes on their property to an investor. And they do this with an auction, and the auctions are different in every state. In some states, they'll bid down the interest rate. In other states, they'll bid up the price of the lien. We call that premium. And in some states, they'll bid down the percent ownership of the property should the lien not redeem, and you get the property, because you can, in some instances, get the property through a tax lien, but it's not the norm.
Right.
99% of liens across the country, and of course this varies in different areas of the country. In areas where the property is really valuable, it's going to be 99 or 98% or higher of property that gets redeemed and does not go to foreclosure. But in other areas of the country where property values are lower and more depressed areas of the country, it could be higher. And when I say higher, I mean a higher percentage that you'll get the property, that it will go the whole redemption period without being redeemed. And then the investor that has the tax lien on the property will be able to foreclose. All right.
So yeah, I'm glad that you said that. I was going to interrupt. So when you talk about redeems, what's the average on a tax lien? If someone was to buy the tax lien instrument at an auction, like what is the average redemption period? I know they're different in every state and county, but like, is it, because in my understanding, which is very little, is that normally they're like between 1 to 2 years. So
it can be anywhere. The shortest can be like 60 days.
Okay.
And that's for a redeemable tax deed, actually, in Delaware. But the longest tax lien is about 3 years. Okay. And most tax lien redemption times are between 6 months and 3 years, depending on the state. Although there are certain liens in Indiana in which the redemption time is only 4 months. And as I mentioned, there are redeemable deeds in, which I know you're familiar with because you invest in Texas, which is redeemable deeds. And we kind of didn't really mention that, but redeemable deeds are kind of a hybrid between a lien and a deed. And even those redeemable deed states can be so different. Some are more like liens, and some, like Texas, are more like deeds, where when you buy that deed, you're considered the owner of the property, but the previous owner still has a right of redemption.
Right.
But then there are other states like Georgia where you don't own the property when you buy that redeemable deed, and you have to wait a year, and then after the year you still have to foreclose just like you would as if it was a lien. So there's a big difference among redeemable deed states also.
Right. So tell me, why did you choose tax liens over, I know you mentioned that you do deeds, but why you preferably, give me the pros and cons of what you.
All right, a very financially sophisticated reason. I lived in New Jersey at the time, and New Jersey is a lien state. So that's the main reason, because that's where I lived at the time that I started. But a good reason is because you need less money for liens than you do for deeds, because you're not actually buying the property, you're paying the taxes. And in some states, it's just the back taxes that you pay to get the lien.
Okay.
Whereas, in deed states, it's not too often that you get the deed for back taxes.
Well, it depends on the state, because I like brought the houses needed to be tore down, but I feel like the deeds, that's my pretty much tagline, is that you can, in my understanding, is that you can get properties or land for very cheap.
Yeah, it works on the land, and like you said, like houses that need to be torn down. But I guess because of infomercials that used to be on TV where people showed houses after they had spent $50,000 to $100,000 fixing up the house they bought, and said, "Oh, $40 lien, and look what we got." That's not the way it works.
Yeah.
And even with deeds, as you know, like I have a client who just bought a deed in Pennsylvania where I live now, and he spent $26,000, which was more than the back taxes. I don't know how much the back taxes are, but they were probably less than half of that. And it doesn't sound like a lot of money, but because the property's probably worth around $100,000 once it's fixed up. But this is a distressed property that could be knocked down. It could probably also be fixed up, but it needs to be totally gutted. It needs everything, including a new roof. So those are the kind of properties that you can get at the deed sale, sometimes for back taxes.
Mm-hmm. Yeah, well, most of them are back taxes, and the only reason why they go up is because they're at the auction, so people bid them up. So I always tell people,
exactly,
it just really depends on who's at the auction that day, that how far it's going to go up beyond the back taxes. So, well, thank you for explaining tax liens to me. I did want you to talk about, you are going to be having a free conference, is that right?
Yeah,
Yes.
And I can't wait for you to take. Okay, well, it's really a tax lien investing conference, but I want to make it about tax deeds too. And because I don't do a lot of deed investing, I have some clients that are doing deed investing in states like California, and I've helped clients in states like Michigan and here in Pennsylvania. But most of what I do is liens. So I'm bringing in you to talk about the deeds and overages, which I don't do at all. But I also have somebody coming to talk about tax sale finders and tax sale resources that we both use to get access to, for me, it helps me know what tax sales are coming up, whether it's deeds, liens, or redeemable deeds around the country. And the whole idea of this conference are things that make your tax lien and tax deed investing easier, more profitable, and more fun. So those are the kinds of services that we're going to be talking about. and people that I will be interviewing, including yourself, and I'll have somebody interview me as well. So yeah, we'll be talking about anything related to making tax lien and tax deed investing easier and more profitable.
Great. Well, thank you. So for all you guys that are watching, I will have the link and the description on how you can attend. It is May 5th, I believe. Is it 12 Eastern time or 1 Eastern? 12?
It's 12 Eastern time to 4 p.m.
Okay. Okay.
And you'll be on the end, like I'll be talking like in the middle,
Okay.
and you'll be talking not the last speaker, but the next. So around 3 o'clock, maybe a little bit before 3 o'clock.
Eastern time, right?
Yeah, Eastern time.
Okay.
For people that want to, definitely want to hear you speak. Make sure. So it's May 7th. Save the date. It's a Thursday, May 7th. I'm sorry, I'm wrong. May 5th.
I was going to say, it's okay.
I'm thinking May 7th because I had a friend who's somebody in her family passed away. So I just found out that is May 7th, which I'm glad it's not on May 5th because May 5th is our conference.
Right, right. So May 5th, you guys, May 5th, you can join a live. It's going to be Zoom event. Once again, it's going to be in the description. And it's about making your tax lien, whether you're doing tax liens or tax deeds, making it easy and fun, because that's all what we want to do is have fun and make money, right?
Yeah, and I can't wait to interview you about the deed investing because you have secrets and tricks to deed investing to make that more profitable and more fun. Like you said there, you know how to get properties for back taxes. And I know there are tricks to that because I know that's what I do with liens. I try to get liens at better rates. And then a lot of people are able to get them. I have people that come to me that have been trying to invest in liens, but they haven't made any money at it yet. So that's what I teach them how to do, is how to do it profitably.
Well, that's good. So if you're looking for tax liens, please hit Joanne up. She's at TaxLienLady.com, and she's also on YouTube as well. So happy investing, you guys. Is there anything else you want to add to the tax lien investing that you want to tell the people in my community?
I just want to say that it is important to know what you're doing, just like with the tax deeds, right? It is important to know what you're doing. People do get wrong information and wrong advice, or go ahead and jump in and they really don't know how to do it correctly. And you can lose money if you don't know what you're doing, but it's really not hard to do it right and to make money at it. So.
Speaking of that, I know we had a conversation before. I remember you saying, because I was just like, well, what if they never come back and redeem it? Like, so, because that's my understanding. Like, my understanding is it's a piece of paper that the county is transferring the lien to you. So now you're the owner of that lien. So I remember you saying that a lot of people were saying it's backed by the government, so it's a guaranteed investment, but that's not true. Can you talk a little bit more about that?
Yeah, some gurus used to use the term government guaranteed, and people would hear that and they would think they're guaranteed to get paid, so they could just go out and buy a tax lien and they're guaranteed to get paid. That's not what they mean. What they mean is the rate of return, or the interest rate or the penalty that you're getting is guaranteed by government laws, by the state laws. But the only guarantee is the real estate that's behind that piece of paper. Now, sometimes you get the tax lien certificate, which is like a notarized piece of paper, like you said, and that's very important because you have to send that in to get redeemed. But sometimes you don't even get that. Sometimes you just get a receipt, or with some of these online tax lien sales in Arizona and Florida, they'll just send you an electronic receipt letting you know that what liens you have. And they don't actually send you the tax lien certificate, but that's okay. Because everything, they'll keep track of everything for you. But the idea is that tax lien certificate is a government lien on the property. Even though it's your lien, you own it, it's a government lien, and it comes in front of, or it's superior to, any other liens except for government liens. So somebody has a mortgage on that property, a mechanic's lien, anything other than a government lien is not going to interfere with you getting that property after the redemption period's over. If it doesn't redeem, in a lot of states, you actually get to foreclose on the property. In Florida, you don't get to foreclose on it. You have to do a tax deed application and put it into a deed sale. As you probably know this, if you're a deed investor, because that's what fuels all the deeds, all the deed sales in Florida. So, but what happens is when it's sold in the deed sale, then your lien gets satisfied and you get paid. So your guarantee is the property. Because if it goes to the deed sale and it's not a good property, nobody's going to bid on it. I mean, you will get it,
Right?
But you got to be able to sell it and make your money.
So does the interest on that tax lien just goes away then, and you're just hoping that you get the money and not the interest?
Well, you're talking about the same thing, because you're going to get, if it gets redeemed, you're going to get the money that you spent on that tax lien back, plus whatever interest or penalty that particular government gives. And it's different all over the country, okay?
Right.
Now, if it doesn't redeem, you actually get the property. Now, in some states, you're going to have to spend a little more and get an attorney to go through foreclosure to get the property, but then you're actually going to get the property. So you're not going to get your money back. Instead, you're going to get the property.
Right. Okay. Yeah, that was my understanding. You said something else that I was thinking maybe somebody else would ask. I think it was, so basically after you, like you were saying, like for Arizona and California, they kind of keep record of the tax lien. So you don't really have to per se worry about it because they don't actually give you the certificate. So
Arizona and Florida, because they have a lot of sales online and they have a lot of volume. So they have managed it so that the tax collector does everything. And it works because if a property is bought or sold, it has to go through the tax collector.
Okay. So after that, when people purchase the tax liens and it's just kind of like a roster, let's just say for the sake of, easy investing, that there's a roster, like, so they keep track of it. So if that person comes back and redeemed, does the county send you a check, or do you have to call the county and you have to verify after a year or so? Like, how does that process? Can you tell me?
Yeah, in those cases where they have the certificate and they don't give you the certificate, they will just send you the redemption.
Okay.
If it redeems. In cases where you have the certificate, they'll reach out to you, tell you that it's redeemed, and you have to send in the certificate. And depending on how you got the certificate, like in New Jersey, for example, if I buy a certificate in an entity name, in my business name, just the officers of the company sign off and send it in, and then you get your redemption check. If I do it in my own personal name, I have to have it notarized. So I will have to take it to a notary, sign it, and then send it in, and I'll get my redemption check. Now, there's a little more to it in states where you actually get the certificate, because in those states, sometimes you have to record that with the county clerk. For instance, in New Jersey, I have to record that, and I have to pay the recording fee. Now, I'm going to get the recording fee back when it redeems, if it redeems. And if it doesn't, that's my investment in the property. Yeah.
Right. That's a whole lot. It's funny you say that, because I was just like, oh my God, this is just too much paperwork. I'm more like, I just want to go to the auction
and property and
yeah.
Yeah, but even when you do that, you still have to record the deed.
No, the deed's recorded.
Sometimes it's recorded for you, but you pay for that at the sale. When you purchase the deed, you pay the recording costs and they'll do it for you. So that's all well and good. But with the lien, in some states, they want you to record it.
Yeah.
And I imagine it's that way with deeds too in some states. It's like every state is different. In some states you have to record it, in some states you pay for it at the sale and they record it for you.
Right. Well, it's different too because other states have different type of deeds. So
Yeah.
so it is different in every state. That's the thing I think where people probably get really confused, and that's why it's really important to kind of like have a mentor. I was actually talking to a student yesterday, and they were wanting to know more about my services, and I said, but I always tell people, they could look on YouTube or they could, find things on Facebook, but you're gonna pay one way or the other. And she actually said it. She's like, yeah, I'm either pay for it in my time, or I could just pay you the money and eliminate the time. And I was like, that's actually a good tagline. I'm gonna have to use that because I've been trying to do YouTube ads for 2 years because I didn't want to pay like $15,000 for someone to teach me, but I still haven't done. I've been trying to figure it out, so I just end up paying because I spent 2 years trying to figure it out, and I still kept hitting my head against the wall. So yeah. So I guess you pay one way or the other.
Yeah, and sometimes it's easier just to pay somebody to do it for you, like with the YouTube ads.
Yeah, well, I tried that too. They didn't know what they were doing. They really didn't know what they were doing. Well,
that's the thing. You really need to get somebody that knows what they're doing.
Right.
And it's the same thing with this. You really need, and there are people out there that might seem to know what they're doing, and they might even have a big company or a big name, but here's what I tell people. Anybody that says they're an expert in every state is probably not telling you the truth.
That is
because it's so different in every state.
That's 100% facts. That's why I always tell people I'm not a guru. I just teach a process that I know can work, but there are different intricacies in those specific counties. But I just teach like a system, a platform where you can literally go into every state and county and use this same system, but there are going to be things that are different. So yeah, someone asked me that. They were like, do you have a list? I was like, no. I was like, there's 3,006 counties in the United States. There's no way that I could cover all those counties.
Right. Yeah, sometimes I get somebody ask me that too. Oh, do you have lists, the tax sale lists? I'm like, no, no, but I have, I'll give you access to a resource where you could find out what's coming up around the country,
Yeah, tax sale resources is really good for that.
Yeah, and they are going to be at the conference on May 5th. So
good. I'm excited. Well, I'm just going to conclude this video, and thank you for coming on and teaching us a little bit about tax liens. I did learn a little bit more today than I did previously. So for all my community that was asking about tax liens, once again, you can reach out to her. It's TaxLienLady.com. And don't forget to register in the link below in the description. I will have the link to register for a tax. It's a free tax lien and tax deed conference.
Okay.
Happy investing, guys. Thank you, Joanne.
Thank you for having me.